Okej, cześć, witajcie. Z tej strony Marcin z blogu Social Trader. Dzisiaj krótko z mojej strony, jeżeli chodzi o zapowiedź tego, co chciałbym, żebyście dzisiaj posłuchali odnośnie cyklu Crash Course. Ten odcinek jest, można powiedzieć, takim troszeczkę niezwiązanym ze strategią opartą o wykres 5-minutowy, którą ja gram i którą tutaj Filip we wcześniejszych materiałach zaprezentował. Natomiast ten materiał dosyć fajnie pokazuje, jak należy podejść do zarządzania swoim kapitałem, do zarządzania ryzykiem na otwieranie pozycji oraz to, w jaki sposób długofalowo powinniśmy planować swoją grę na rynku Forex i że na przykład nawet posiadając strategię, gdzie naszym założeniem jest risk-to-reward ratio 1:1, jesteśmy w stanie w długim okresie czasu wygrywać i mieć z tego zyski. Mi tak naprawdę ten materiał bardzo otworzył głowę, że oglądałem go naprawdę kilka lat temu, że tradowanie to nie jest czas na to, że nie potrzebujemy, że potrzebujemy na to czasu, a nie mamy skupić się tylko i wyłącznie na, nie wiem, na tygodniu, dwóch, że to nie od razu Rzym zbudowano, tak, że po prostu do tego trzeba się naprawdę przyłożyć i rozplanować na dłuższy okres. W moim planie, który już przedstawiłem, nie wiem, czy go jeszcze nie będę rozszerzał, o pewną koncepcję, którą tutaj Filip prezentuje, czyli dodawanie do kapitału swoich jakichś oszczędności, które posiadamy. To się troszeczkę gryzie z tym, że chciałbym po prostu po jakichś okresach miesięcznych się wynagradzać za dobre rany, ale jeszcze będę się nad tym zastanawiał, w jaki sposób to u siebie zastosować i czy też to będzie miało przełożenie na czas, w jakim będę realizował swój plan, czyli cel to jest 50 tysięcy na koncie, którymi później dalej będę tradował. Może już nie w tak agresywny sposób, może też w agresywniejszy, mniejszą częścią. Zobaczymy. To jest jeszcze przyszłość, także zapraszam Was serdecznie do oglądania materiału. To jest około 20 paru minut naprawdę dobrej wiedzy o money managemencie na rynku Forex. To zapraszam.
Right, welcome to this little bit of information that I would like to share with you people. It's something that I wanted to do a long time ago, or not really I would say a long time ago, but some time ago, and finally I got the chance to do that. It's about people complaining about huge stop losses, going into a trade with a huge stop loss, and everybody is saying, but the stop is too huge to get involved into the market. But there's something I want to share with you people in terms of if you got a sound strategy that gives you, let's say, 6 or 7 out of 10 correct trades, that you don't even have to worry about the amount of pips your stop loss have to be. It is all about the right or wrong, point number one, and then point number two, the most important part, is your risk-reward ratio. You should have a 1-to-1 at least. Let's say 1 to 0.8 You're going to see that a little bit later, but let's work on a one-to-one from the start when you do your back testing. What I've done is I've taken end of day, very simple strategy, because I'm looking for an end of day strategy, which involves a normal engulfing candle, and then the size of the engulfing candle, the high and the low of that candle, that determines my stop loss, plus about 7, 8, 9, 10 pips. And then on a one-to-one risk-reward ratio, my profit target is equal to my stop loss then. So as you can see there, January 2008, the gain was 130, but my stop loss was also 130 pips. Then there was another trade where the stop loss was 290 pips. But because of the strategy that I'm using, it means that my gain is also going to be 290. And I've done that for 4 currency pairs. I did not even get to the 5th one, because after the 4, it really showed me that the euro dollar and the British pound looks like those two is going to give me the best combination. I started to look at the British pound, Japanese yen, but there you're talking about moves of 500 pips, 600 pips in one day. So I've decided emotion-wise that might just be a little bit too much. So it's not about the strategy, it's about emotions as well. But I was happy with what I found there after I did some testing here. I did some testing on the what was that? Also New Zealand dollar, British pound, New Zealand dollar. Things like that, just some spot checks, and then I've decided no, that's the two that I'm gonna stick with. Right, what did it give me after 6 years or 3 years? No, not 6 years, 3 years for the euro dollar, starting 2008 in January, right up till now. The same with the British pound, has given me a total of 46 trades. So you can see in 3 years it's only 46 trades on 2 currency pairs, with 37 right and only 9 wrong. Now on a one-to-one risk-reward ratio, I mean that is some trading. But now one has to be careful to say, but why don't I look over all those currencies? The point is, in January there's going to be 2, 3, 4, 5, and maybe let's say here 6 trades. You're not going to have 6 trades because some of them last 3, 4, 5, 6, 7 days sometimes. So you're not going to have all the trades at the, let's say you decide only to do, have 1 trade open at a time. That is the main thing. That's also part of the testing. I found that at a time I won't be able to take, for instance, that trade, because I have that one on the British pound still running. Okay, not there. Let's take it here. I won't be able to take that one on the Aussie dollar CAD because I'm in the US dollar Japanese yen trade. So that one I can't count it then. So it's all about, if you want to do it very fine, you have to even map your timing that you are in a trade in terms of the 1st of January till the 10th of January, and you know you cannot take another trade on any other currency pair as long as that trade is open, because that means a second position. That enlarges your risk, right? So that's the basis for what I've done here. Then what I further did is, for 2008 on the British pound, euro dollar, all the trades, I've written it down there, and same for 2009 and same for 2010. Then I add up the pips and things like that. You can see the average pips for the euro dollar was 82 per month for the 3 years, and for the British pound was only 38. But I want to show you something else. To me, it is irrelevant whether I make 290 pips or whether I make 20 pips. If my stop loss is 20 pips and my take profit is 20 pips for a one-to-one risk-reward ratio, I'm going to make the same amount of money. How do I do that? By deciding on my starting capital of 250 pips. That's what I said there. Let's start with $250 capital. We start with a risk of 5% and work our position size according to that. So 10% of $250 is $25. You agree? So 5% of 250 will be $12.50. So that is what I'm prepared to put at risk at trade number 1. There's my trade number 1, for instance. So I'm prepared to put 5% of $250. That's $12.50. Right, now if my risk reward ratio is 1 to 1, that means if I'm wrong with that trade, I'm going to lose $12.50. If I'm right, I'm going to win $12.50. So all I have to do now is I have to work out on a stop loss of 130 pips. What will my position size? How many mini lots or micro lots or full lots do I have to open that if I'm wrong, I'm going to lose $12.50, and when I'm right, I'm going to win $12.50. That's the whole concept. So what I've done with this piece here is, every time I'm right, I'm putting a 1. And every time I'm wrong, I'm putting a -1. So that means I'm going to gain there. And I'm 5% of my capital. There I'm going to gain 5% of my capital. Right up till there I'm going to lose 5% of my capital. And then again, that's how I'm going to work it out. So no matter, there was a stop loss of 470 pips. I think that was the biggest one in that year. There's the 395. 470 pips stop loss. But it was an engulfing candle. It's part of the strategy that I've back tested. So I'm not going to give you the strategy here. That's not what I'm want to do. I want to give you how to manage big stop losses and still maintain your strategy. That's very important. Now, after every trade, that's what I said there. After every trade, we add the result to the capital and use the new capital size now, and determine our position size based upon 5% of the new capital. Right. That 5% was on the $250 right over there. Now we go to our second trade. That's that one. What we do now is we work the 5% out on the new capital. Remember, I'm adding that $12.50 to the $250. That makes it $262.50. So now, if I'm right, I'm going to gain $13.10. If I'm wrong, I'm going to lose $13.10. That is how it works throughout. And you can see I've done it right up till there, and those and that on each one. Right, there was my first wrong trade. You see, there's the new capital, $407. I worked out 5% of that, which is $20.40. That is, if I will be right, look, my stop loss was 100 pips. Doesn't matter. I take the 100 pips, work out how many mini lots or micro lots I have to open, that if I'm wrong, I will lose $20, which was 5% of my account. And if I'm right, I'm going to gain $20, which is 5% of the account. In this case, I was wrong, I lose my 5%. And look what happened after 3 years. $751. Right. Now this is not, you might say, that's not much. But you go and work out $250, putting it somewhere where it earns interest. How much you're going to have over 3 years? So for some people might say, all those effort to get $751 after 3 years, they might say, I can save that over 3 years. Now I'm going to show you something else which I haven't included yet. So if you can save that in 3 years, it means you can add capital every month as you can. If you got a saving per month and you want to add it, you add it to your capital, your starting capital for that month. let's say at this specific month here, you got an extra $50 that you can put in. Then you add it there. Let's add there plus 50. Over here, you come and you add another $50. And there you come and you add another $50. Look what happened now. Let me just quickly get that out just to keep it correct. Right, but now let's go and use that same start after those first 3 years. You can see there $751.70 starting capital after 3 years. Now year 4 to 6, the next 3 years, look what you would have had after 6 years. After 9 years, that's what you will have. Making only 46 trades every 3 years. That's not trading. Right, let's go to something else that I want to share with you people. And that is, let's say you have a strategy that gives you 10 trades per month, of which 7 is right and 3 is wrong. Sorry. There it is. 7 right, 3 wrong. At a 1-to-1 risk-reward ratio. I even made it a little bit worse. I said, right, sometimes you work out your risk, let's say at 100 pips, and you put your gain as 100 pips, right? That gives you 1-to-1 risk reward. But sometimes there's a pivot line in between, or sometimes there's a trend line or a long-term resistance point, like the 135 level, for instance, on the euro dollar. So you might prematurely close your trade because at that specific resistance line, it starts to hover around there. It goes into a range and you decide to close it there. Now I know the opposite is also true. Sometimes you will get your stop loss also. You might prematurely close it because there was news that has driven it in the wrong direction. But I've decided to leave the risk side at 1 but reduce my reward side to 0.8. So now my risk reward is 1 to 0.8. What I've done is on this specific side here, you can see there, right up till there, that's a count of 10. You can't see it here, but you can count it if you want to. I've decided to say, right, 7 right, 3 wrong. Let's start every month with 2 wrongs. Now that is already a worst case scenario. Not the worst, but because remember, your worst case still has to happen. It's always in the future. Whether you start with 2 wrong, there's always going to be a month where you're going to start with 3 wrongs. And if that's your worst month, I mean, there's still one that's got to come that's going to give you 4 wrongs in a row. This is just worked out on the average basis. But to keep it, not to make it too rosy, as I will say, make it looking too good. Let's start with 2 wrong every month and then put another wrong somewhere in between in the month. If I start with 2 right and then 2 wrong, it's no problem because then I'm break even for the month. But if I start with 2 wrong, I'm immediately down on, you can see there, I started with 250 and all of a sudden I found myself at 225. That's 10% down the drain so far. Because what I've done is on the losing side, I've kept my risk at 1. So 5% of 250 is $12.5. So now I end up with $237. I've got another wrong. 5% of that is 11.9. And then the third one was right. What I do is I work out my 5%. You can see there. Right, let me just, sorry, I just want to show you the formula for that specific one. You can see that I say, right, I take the one, multiplied it by 107, which is that one. So that gives me the fact that I'm right, multiplied by that, and then I multiply it by, if that one is smaller than 0, it means I have to multiply it by 0.05, but if it's bigger than 0, sorry, if it's smaller than 0, if it's bigger than 0, it means that I've gained, and because I've gained, I want to make my reward side 0.5 times 0.8. That's where the 0.8 comes in. So I'm still even reducing the reward side to get to that 12.8. That's all I did there, just to show you that. And now I just carry on until the end of the month. You can see there I ended up $282. That's for January. So let's go down to see what we end up the end of the year. $1,000 after 1 year. So now you can even go, and even if you can add a $10 somewhere at every month end to your account. I just want to show you what can be done. Sorry, this is going to take some time, but I just want to show you and the main thing is that a lot of people don't want to trade this way because it takes a lot of discipline, it takes a lot of patience, and that's one of the things that I found people don't have, and the reason being for that is because the propaganda that is given in the Forex market is really something that tells you, man, you can make a lot of money very quickly. Right, and I've got to add the end of the month 10 as well. Right, so I added $120. That is 10 a month. So I should have had 1,200 and something. So I immediately in that year added another $100 just because of that extra that I've put in. To me, that is also important. Right, let's make that $500. Start with a capital of $500. Look what you ended up, $2,300 capital in the bank. Right, your gain is not much. Your gain is only $91 because remember, you go to 5%. But the moment you start doing this for a couple of years, I'm telling you, if you're still young, this should be your business plan. Because in 10 years' time, you're going to have a lot of money. Right, I hope this has really showed you something. It's all about what is your strategy producing in terms of right and wrongs, and does it have a 1-to-1 risk-reward ratio. You can still work it out. Let me just scroll down here. Another thing is that's for the first month you get a 7, or your back testing shows you, for let's say you've done 2 years back testing, and that's what the strategy is giving you. Now each month as your trades are done for that month, you add it and you work out your average once again. You might find that becomes maybe 11 trades per month after time, with 7.2 right and 2.8 wrong, something like that. And that might increase to 1 to 0.85 maybe, for instance. So you've got to update that as well, so that you know what your expectancy are for in the future. So just work on that. But what I wanted to show you here is that you can trade a daily strategy. Don't worry about the amount of pips. Do your backtesting about the rights and the wrong. That is the two you gotta look at. And then, what is the risk-reward ratio of that strategy? If it's a 1 to 0.5, it's fine, as long as there's more rights than wrongs. And the point is, if you only got a 1 to 0.5, it means you have to have 6 right and 7 right and 4 wrong to make money. Because the 7 right gives you only 3.5. So not even 7. You need a 8.2. If you got a risk reward of 1 to 0.5, it means you have to have 8 right and 2 wrong, then you make money. If you have 7 right, you're not going to make it, because the 7 at 0.5 gives you 3.5 right, and the 3 wrong, no, you still make it. Yeah, you still make it, because the 3 wrong is going to give you 3 wrong, and the 7 right is going to give you 3.5 right. So you're going to score 0.5. But then you're not going to make a lot of money if you work on the 5% capital risk reward ratio. If you only risk 5% of your capital. So that is also important, that your risk reward, that when it starts getting way below 0.8, then you cannot really make it. So you've got to have a strategy that gives you above a 1 to 0.8 and at least a 6 to 7 out of 10 trades correct. If you have that scenario, and your backtesting is gonna do that, and don't fool yourself, please. Really be strict. Write down your rules. The rules that I have on this specific one was engulfing candle. The size of the engulfing candle is my stop loss, and my reward is the same. If the trade goes at least 70% in my favor, I want to go to at least a 20% gain. If it goes 80%, I want to put 30% in the pocket. If it goes 90%, I want to pocket 30%. So let's say my stop loss was 100 pips and it ran 90 pips. So it's still 10 short of my reward. I'm going to pocket 30. If it ran 80, I'm going to pocket 20. If it ran 70, I'm going to pocket 10. If it goes 60, I'm going to break even. So there's some filters in that does help me not to let a trade that goes 80% my direction to come down and take out my stop loss. Somehow you can filter out some of your bad trades as well. As I said, if it's news driven in the wrong direction, you can close your trade and walk away. But if your stop loss is 250 pips, it's got to be bad news to take it down to 250. So you have to evaluate also how severe the news are, especially if you're on a daily. And another thing is, you will know that you're going to go over weekends with this daily strategy. That's also another thing, and you've got to work that in as well. But your backtesting will show you over a period of 3 years, will include even the bad ones. So I'm not worried about that at all, because we're talking about sometimes, as you can see there, over 400 pips. There was a 395 stop loss there. So it will really take some bad news to move it 395 against you. There was a 250 against. There was a 250 against. So it happens. It's not that it cannot happen. Right. I hope this has helped you. I want you to go and do some back testing about your strategy that you are scared to take because of huge pips. That shouldn't be the case if you take this scenario and you work on this concept that if you're right, you gain amount of dollars. If you're wrong, you lose amount of dollars based upon a certain percentage of your capital. And then you work out your position size according to that. What is your risk that you want to put up in terms of 5%? And then go take that 5% as dollars whether it is $20, go back and work out how many lots you have to open that represents that 5% of your capital. And then it doesn't matter, because you know you're going to lose that amount of money. You're not going to lose that huge amount of pips. The huge amount of pips is not in count anymore. I think that will ease your emotions better. And eventually, as you go along with the strategy, especially if you've got a sound strategy, you will see that at the end of the day, it will really help your emotions as you see your account grows. Right, I hope this has helped you.